DLF, Ashok Tyagi, Group CFO of the company, joins us to discuss their outlook going forward. Mr. Tyagi, thanks very much for speaking with us. Let's discuss your results first. Sales are just not happening for your company. At the start of the year, you had guided for 8 million square feet, and in the 9 months gone, you have just done 3 million square feet. Why is the company struggling with monetizing sales?
So we had guided the market for a total sales in the range of a value of about 6,000 crores. You know, the million square footage would keep on varying depending on the mix. And against that 6,000 crores, we have done about 3,800 crores as of end of Q3. Having said that, it's a fact that the sales have tended to slow down, specifically in the last 3 to 4 months. And that honestly is determined by the macro environment here, but yes, it is correct that the sales have begun slowing down.
So what is the strategy for ramping up sales, as again guidance of 6,000 crore top line seems to be certain that you'll miss on that?
Okay, so honestly, you know, our first strategy this year was that we needed to ensure that we adhere and we deliver on the guidance on the net debt, which I think we are. So we should hopefully, we have already hit the net debt target of 17,500 crores by end of March. I think we're already there. So I think that should be okay. On the sales piece, unfortunately, given the way the markets are right now, we have launched all the products that we had. You know, most of them are already out there in the market. You know, we would obviously appreciate if their offtake was faster than what it is. But given the market situation, you know, that's what it is. We believe that, you know, this situation may continue for at least a couple of quarters more before, you know, the general sentiment leads to an uptick in sales. But from our standpoint, all our approvals are there. Most of the products that we had to launch are already launched out there in the marketplace, available to the customers. It's just that the pace of sales have begun slightly slowing down across the last 3 to 4 months.
Right, Mr. Tyagi, but you've achieved the guidance for getting down net debt to 17,500 crores with selling Amman Resorts. But now you've guided for 14,000 crores for FY16. How will this number be achieved given that the company does not have any major non-core assets to sell anymore?
So, I mean, 2 or 3 things. I mean, honestly, our only hard guidance from a net debt standpoint was the 17.5 for March 14. We obviously always indicated that over a medium term, we would like our debt to be at a level which can be supported by our rental business, which today is a number more like 13,000 crores. Hopefully over time it will become 14 to 15. So yes, there is still a gap that needs to be covered. But in all fairness, given the way the markets are, we have said that across at least the next few quarters, we expect our net debt to continue in this range, which we are very comfortable with right now. So that it will still sort of be at the median of 17.5 for the next 3 to 4 quarters at least, before the markets, you know, improve enough for us to start refocusing on taking it down to the natural rental entitlement. B, to your second point, you know, obviously, you know, if there is some small monies that one needs for land, capex, or any operational deltas that one has, while one may not have big ticket disposals any longer, we still are in the process of identifying some of the smaller non-core disposals that we will hopefully have in our set. And those would continue to be disposed of, you know, as and when the need arises.
So let's talk about the Amman Resort deal. When will funds from the Amman Resort come in? How much will be the net inflow to the company post paying off the debt? And also all sort of taxes. What is the scheme of arrangement in terms of payment?
So obviously without breaching lots of confidentialities, I'll tell you that the entire money has been paid by the seller, by the buyers. So the entire money is now available within the DLF system. You know, obviously the debts which had to be paid have been paid or are in the process of being paid off, and the residual money will come in, you know, across the next couple of weeks or so, but it's all available now within the DLF system. The seller has paid their dues completely. The buyer has paid their dues completely, apologies.
But can you tell us what's the net amount that has come in from the Amman sale?
So the bookkeeping of this will actually happen in Q4 because it's a transaction which has closed in February, and because it, the bookkeeping across multiple nationalities and multiple entities is a complex process that will take place in Q4. However, from a money standpoint, the entire $358 million has come in, as I've mentioned, and net of the debt, from a net debt reduction standpoint, the entire $358 million is the value from which our net debt would have gone down after this transaction.
So which projects are now going to guide sales going ahead?
So we have the Camellias and the Crest in DLF 5, which are already launched, partially, the approvals are there for us to launch the next phase. We have a couple of projects in New Gurgaon, what we call New Gurgaon, which are already launched. We may have one more project in New Gurgaon coming across the next 1 to 2 quarters. We have projects in both north and south where we have existing inventory which will be there. So in all fairness, we have enough stock either in terms of WIP or in terms of approved launches that is there waiting for the market to pick up before sort of hopefully it translates into sales.
All right, Mr. Tyagi, then a final question. Where will you end the year, and of course that's FY14 and also FY15, in terms of revenue and the amount of square feet that you would sell?
Honestly, given the way the market is, I do agree with the fact that achieving a 6,000 may be very difficult right now, given the fact that we have whatever in the last quarter. So we'll obviously continue working with the best way, to the degree the markets permit us. From a next year standpoint, our launches in terms of most product markets that we operate in, we have the products out there. Let's wait for the next 4 to 6 months to see how the markets shape up, because we do believe that hopefully we have enough products out there to be able to achieve a respectable level of sales, which is what we really should be doing.
All right, Mr. Tyagi, we leave it at that. Thanks very much for joining us.